more about individual stocks. IVRCL next. S. Ramachandran of the company joins in to talk about what's been happening with the business. Mr. Ramachandran, good morning. Didn't really get a chance to talk after your earnings. Could you just walk us through how FY14 is looking in terms of order book visibility and which big projects you think will come on board and show through for the course of FY14?
We have an order book of about 26,000 crores, but out of them, a few of them are non-starters for various reasons. So effectively, we can say anywhere between 18 to 20,000 crores is the order book which is actually implementable now. And in any case, as far as FY14 is concerned, this should be a much better year from the point of view that we have done a little bit of reworking in terms of our overheads and people cost. A lot of unwanted stuff has also been removed. I would say that we definitely would have an upside from here. In terms of the sectors, buildings is doing quite well. We have fairly good order load of about 4,500 crores on buildings. Irrigation and water is also pretty strong. We moved to different states such as Madhya Pradesh, Chhattisgarh, and now something is coming up in Odisha. Gujarat was always there. In terms of transmission lines, it still remains at the nascent stage. And last but not least is our highway sector. So our turnover would come from basically these four sectors. And in addition, we do have some orders from railways. That's what it is for FY14. Things are looking up. The only constraint here that's actually for all of us infrastructure companies is financing. We did have problems. I presume it's with everybody. And this is the time we expect the bankers to come forward and hold us or at least support us, which is what even the finance minister has been telling the bankers, that you must treat them differently and should not be fair with their friends. With all these years we have been giving them fairly good amount of business, but when we are in a little bit of trouble, I think in all fairness they should support us. Some of them are doing. I guess the others also will come forward.
Mr. Ramachandran, good morning. The analyst community has gotten quite positive on your company ever since you made clear your intent to exit some of your assets and reduce your debt. Can you give us a definitive guideline of how much you plan to reduce your debt by from this current 3,000 crore figure that you're sitting at? And what are the tools that you guys will use in this calendar year itself, either in the form of unlocking value in your SPVs or any other asset sales?
It has to be the SPVs only. After having signed this definitive agreement with Tata Realty for the 3 roads, some others are also looking at seriously on some of our roads which are under construction, like Indore, Jabua, Paltan, Baramati, Chandrapur. These are all under construction. Some of them can go on stream anywhere between 6 to 9 months from now. In addition, we also have the Chennai desalination plant, which is doing very well. This whole year it's been hitting over 95% capacity. Things have really fallen for good for us, and I think it's all going to be trying to divest. And now that there are a lot of news that the government has also formed a 3-member committee consisting of Finance Minister, Planning Commissioner, as well as the Minister of Highways. There is some news about them recommending divestment of our equity immediately after financial closure. I think we need it very much to be able to sustain ourselves. In that process, all the SPV debts will come out. I would be happy if we can get another 1,000 crores out of the SPV off, and maybe about 300 crores out of the parent IVRCL debt during the year. We are working in that direction. It's not very easy, but we are hopeful now. I think this year we should be better off.
What has the experience been with regards to road projects though, Mr. Ramachandran? Is it less competitive, or is it still quite cutthroat in terms of bidding, and are margins still quite low for some of these projects?
I think on the concession front, you will be seeing that there is hardly any bidder. Very few roads have actually been bid out, or people have come forward for any offer. I think the concession needs to be, it needs to be revised in the sense that there is no control over escalation, which is a big disaster. If this is how the rupee is going to go up, if this is how the crude oil prices are going to go up, automatically it will reflect on diesel and petrol, etc., and that in turn will reflect on transportation costs, cement, steel. It's very, very difficult for anybody to factor in such an unpredictable and very, very high rate of escalation. One doesn't get a job in that. So I think there is a talk also going on to see how some element of this escalation can be factored in a new concession. I think unless the concession is modified and made more fair to both the concessionaire as well as the government, things are going to be non-starters for some time to come.
So just to throw some more light on the cost overruns that IVRCL is seeing, this quarter you did see some improvement in your margins to about 9% or so, but the fear is that your cost overruns will prevent margins from improving further going ahead. What would your sustainable trajectory be in terms of margins in FY14?
See, in addition to cost overrun, we also have a threshold overhead. Essentially in any infrastructure project, unless the top line improves drastically, it is not able to sustain the threshold overheads which are there. It is to do with cost of finance. As you know, interest rates are very high. It has to do with people costs and all costs of administration. So unless the magic only lies in increasing the turnover so that the overhead can be absorbed. So to that extent, we have taken some definitive action to see how we can reduce our overhead costs in all ways. But what is most crucial is to be able to work on our receivables. Typically when we close the project, the final bill hangs on. That money is due. Retention money hangs on. That money is due. All of them, you have bank guarantees. Now, bank guarantees is actually as good as money. So unless we have, improvements in these directions, they are definitely going to bite into our margins. At the gross level, I think we would still be anywhere between 9 to 11%.
Okay, we'll have to leave it there. Thanks very much for joining in today. That's IVRCL talking about their business markets.